Good morning, everybody. Hey, welcome to this Wednesday, the 7th of May. Hope your week's going well. We've had a couple, down days. It looks like today maybe we get a little bounce due to some China talks. We'll talk about that and more when Dave joins us here in just a few seconds. Hey, before he does, though, let's not forget that in this world we live in, there are so many things that are out of our control. You can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that it really matches up with the amount of risk you should have in that portfolio based on your current circumstances. Give me a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
Oh, 5.7 Light FM, Andy and Nancy Wilson. That's Hearth there, and I'm Morning Dave. We're at 8:42 here. It's 18 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And hello there. It's time to check in on your money. It was kind of a stinky day on Wall Street yesterday, but it looks like it might actually be a green day today. Let's check in with Phillip Statler from Statler Financial Services and see whether he's got the same read on it. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Doing well. Was a little surprised to see some green ink this morning as I looked at the futures about 4:30 this morning.
Yeah, I was kind of surprised too. I mean, I was postulating the other day that, two potential causes. One of them might be just taking money off the table to see what the Federal Reserve does this afternoon, but maybe it was just profit taking and nothing more, because all of a sudden we haven't said anything yet out of the Open Market Committee, but we're starting to trade up this morning. I guess we can write it off as profit taking and nothing more, huh?
Well, it could very well be, and it could have been, when this announcement was made today or yesterday, I guess, about China, and it was maybe after the market closed, and so, now we're seeing some bounce because of the trade talks, supposedly coming online with some of the not the peons, but a couple levels up on with China.
Yep, that was the big announcement yesterday. We actually are admitting that we're talking to China, and you and I were basically kind of making fun of the fact that, when it's just office mole to office mole level, they don't admit they're talking. But now all of a sudden, evidently somebody with a middle manager title is in on the talk, and that's enough to have us admit it, evidently, right?
That's what it's looking like today, Dave.
That's about it. We were talking before we went on the air, and it's a good time to kind of recoup this conversation that we've had before. This is not the same as the trade war that we had with China 4 years ago. Number one, the tariffs are much broader and much larger, but also China's in a completely different situation. This morning, the Chinese central bank reduced their interest rate again, which is kind of the equivalent of what our Federal Reserve does this afternoon with our reference interest rate. But also they did something big. They also changed the requirements on their banks in China to allow for lower reserve levels. The amount of cash a bank has to have on hand, they can spend themselves down farther, which is basically in any economy, whether it's command and control or a free market economy like we pretend to be, it still frees up a boatload more cash into the Chinese economy. Indications are it sounds like they're girding for battle, but at the same time, it may be an indication of just how much trouble the Chinese economy is in after that real estate crash that we've been following for the last few years.
Yeah, it is, Dave. I mean, I've read several headlines and articles that give some indication that, that China could actually be on the verge of a depression, going into a depression, which would be catastrophic for them, as large of an economy that is. So, I think at this point, as much as the Chinese would not admit it, that they don't have very many cards in their hand to play, and the United States is holding a lot of cards, and so. I think that they will work something out eventually because at this point, China needs us to bail them out, to get their factories back up and running, and for them to produce goods that we will buy. And so it's going to be interesting to see how long that actually takes to get done.
Absolutely. The gross domestic product out of China, they also put that report out over the last 24, 36 hours. In the first quarter, they showed a 5% annualized growth rate. Two thoughts. Number one, in China, that qualifies as negative for all intents and purposes, because with their population base, they've been shooting for like 10%. But also got to keep in mind, that's kind of like what our import-export trade deficit showed. We stocked up a lot before the tariffs hit, so consequently it was kind of a boomlet for them. And if a really high tide rush only gives them a 5% annualized growth, your point's taken. They're in some economic duress right now over there, and they're probably in more of a rush to talk than we are.
I think so at this point. They won't admit that, I'm sure, but it is definitely given us a reason to expect a decent outcome from the talks that should be going on.
Absolutely. Put it all together. I mentioned this earlier, my fear and greed index. The short-term nature of Wall Street thinking, this underscores it. That fear and greed index that I watch with the news out of the negotiating with China. Treasury Secretary Bessent said that we could be announcing some trade deals as early as this week. We went from extreme fear less than a week ago all the way up now into greed as far as mood of the small investor on Wall Street. And I just look at that and say, wait a minute, we're nowhere near the end of this tunnel yet, and all of a sudden people are getting greedy, which is kind of sort of why I wonder about Wall Street investors at times, don't you?
Yeah, well, yeah, they have a short memory, and so we'll see what ends up happening and what the ups and downs look like, as every little bit of news is going to cause the markets to go up and down.
Yeah, memory cells about those of a kindergartner on a grade school playground at times. I worry about the people that are really swinging my IRA values up and down. Other things going on. Basically, we did not have any good news. Not really any heavy news at all when the new Prime Minister of Canada came to visit the White House yesterday. They all basically parted company with a handshake and the agreement that they don't think much of each other. And Canada's not for sale, he said. Trump said we don't buy anything from Canada anyway, which kind of made me go, huh? But one way or the other, they basically agreed they don't like each other, and that was about the extent of it. Other than that, we're in a real slow week, everything being relative for government reports, and that means we're actually trading off of the companies that are reporting their P&Ls. One of the big ones came out, Disney. How did they do over the last quarter?
So Disney had a great quarter. Their revenue came in at almost $500 million more than expected. Earnings were about 25 cents more than expected at $1.45. And they also raised their full year earnings outlook to like $5.75 a share for the year. That was a lot higher than the Wall Street estimate of $5.43 a share earnings. On a separate note, Disney also agreed to partner with a company to build a theme park and resort in Dubai. And so that should be interesting. But all of that news has been good news for Disney today. They're up 7.9% this morning.
Wow. Just imagine how good it would have been if they hadn't released Snow White. Biggest bomb they've had in 25 years. What else is going on?
So we've got another couple that have done, at least they're up a little bit this morning before we get trading. Wynn Resorts also reported. Unfortunately, they missed on earnings, but it's not a big deal because they got upgraded by Bank of America, which must have wiped out that loss because, they didn't lose money. They made money, but they just missed. But they're trading up today, almost 2.5%.
Well, somebody big is willing to invest in them. I guess it's worth investing in them too, right?
I guess so. You said yesterday Supermicro Computers was going to report, and they did. Mm-hmm. They missed their expectations for their third quarter. They came in at 31 cents a share. They were expected to make 50 cents a share, and they missed on revenue by almost $1 billion.
Oops.
Yeah. So they're trading down today 6%.
And I'm going to assume their guidance was kind of iffy as well, given the amount they have to get out of China.
Yeah, they had some weak guidance. You're absolutely right there.
No surprise on that whatsoever. Anybody else exciting you've noticed?
Oh, I was looking to see if I had anybody else really exciting. Not really, Dave. That's about it.
All right. Sounds good. Resetting the table. Yesterday, like I said, it was kind of poopy at the close. Dow was off by 390. The Standard & Poor's was off by 43. NASDAQ was off by 155, kind of making us feel like we were guessing right that they were taking money off the table. Then we turn around and we look at this morning, 45 minutes before the trading begins. What are we looking at so far?
So right now, Dave, we got green ink. Like I said, it's nice and green on the index side. The Dow is up a little over a half a point. The S&P 500 is up almost a 0.5%, and the Nasdaq 100 is up 0.4%. Big winner right now is the Russell 2000, up a little over 0.8%. Hey, on the other side, we've got silver and gold both retrenching a little bit. Silver down 0.8%, gold down 0.75%. Crude oil up. It's a little higher, I think, than what it was yesterday, Dave. It's at $59.23 a barrel. That's a 1/4 point up from yesterday.
That's not good. But, well, I was going to say that's not good, but I saw a sidebar article. One of the big oil shale companies is saying their extraction costs are such that if we keep the oil price, quote unquote, this low, it's going to screw up their industry. I don't know what to think about that. I like lower prices, but at the same time, I kind of like the American crude industry, especially the oil shale people, to do better. So I'm kind of tentative at the moment. Looking across the ponds, the Asian Pacific Rim generally up because they liked what Chinese central bankers did. The mainland Chinese markets were up by like 0.8% at the close, giving the entire Asian Rim a bit of a boost. Get back to my screen here. Europe is, there we go, generally off by a little bit this morning. The UK markets are down by over 0.5 point. The average European index down by about that much as well, about 0.5 point halfway through their trading day over there. Getting my retirement together so it becomes a plan instead of a dream takes an extra pair of eyes that actually knows what they're doing. How do I find yours to help me?
Dave, that's why I created the Core Retirement Design to help people design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their Core Retirement Analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning about the same time on Light to get a beat as to what the interest rate decision or non-decision does. I'll see you then.
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Bye.